What's going on, guys? Welcome back to another video. In this video, we're going to be talking about XPENG. Now, we got to talk about this company. They just had some massive news released this past week. They had a couple pieces of news, actually. A couple pieces of very positive news and a couple pieces of very negative news. So we're going to go over all of the different things that has come out about XPENG in the recent past. And we're going to go over some of the catalysts in the near future that could send the stock higher. So if you guys enjoy the information that I provide for you in this video, please go down and hit the like button and hit the subscribe button, and make sure you turn on that notification bell so you're never late on any one of these new videos that I put out, and you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. Now let's go over and take a look at the chart of XPENG. We can see that at the end of 2020, XPENG was trading in the low $40 range and then had a very significant run up. It followed its big brother NIO into NIO Day, had a little bit of a sell-off, popped back up, and then started to receive some bad news and was selling off more than expected. So as we saw with NIO had a pretty significant sell-off after NIO Day, but has been consolidating in a range. We are not seeing that with XPENG, and these Chinese electric vehicle companies usually move in tandem with each other, and the main reason why XPENG has fallen so much and we really haven't found a bottom yet is because of this right here. So XPENG drops after recall of over half of SUVs delivered. XPENG is recalling nearly 13,400 electric SUVs, more than half of the 24,000 it has delivered so far. So that's why they fell a lot on Friday. They're recalling 13,399 G3 electric sport utility vehicles due to an inverter issue that may cause the vehicle to lose power and pose a safety risk. That is not a good sign to see from an electric vehicle company. So that's not great for XPENG right now, but we do have an event coming up this week for all of the Chinese electric vehicle companies that I think could send these stocks higher. So if we come over here, we can see that XPENG and NIO and LI are all expected to produce their January delivery numbers. So that's going to happen this week. We can see one upcoming catalyst could lift the stocks out of this lackluster phase, the January delivery numbers that are due next week. If we scroll down a little bit further in this article, we can take a look at XPENG's previous delivery numbers. We can see that in December, XPENG delivered a record number of 5,700 vehicles, a 326% increase year over year, and a 35% increase month over month. For the year, the company delivered a total of 20,041 vehicles, a 112% increase year over year. When you compare the monthly delivery numbers of XPENG and NIO, they are pretty similar. Same thing with the quarterly numbers, but the year-end numbers are vastly different. So the company delivered 27,000 vehicles in 2020, and we can see that NIO delivered about 44,000 vehicles in all of 2020. So if we can see XPENG continue on this massive growth rate of their delivery numbers, we could see a higher valuation coming for this company in the near future. And as I've said before, the delivery numbers are not the deciding factor in what gives these electric car companies their valuation. The technology that goes into these vehicles is also very important. Now, it is not good to see that the technology in one of these vehicles, as we see in this XPENG recall, is causing the stock to decrease in value, and they're having such a massive recall. But long term, I think if XPENG can figure out these issues, which I think they'll be able to, they have the backing of the Chinese government. They have a lot of capital being put into them by a lot of Chinese and American investors. I think they're going to be able to figure out these issues, get their cars back on the market in the near future, and they're going to be fine for the long term. Now, even though XPENG had this very significant recall, Morgan Stanley actually initiated coverage on this company. So we can see that on January 28th, Morgan Stanley starts off coverage on XPENG with an overweight rating as it expects electric vehicle startups to be a disruptive force this year. I agree with that statement. Electric vehicles are going to be the next best thing, especially in the United States, with a Biden administration that is so focused on being more environmentally conscious. So we can take a look down here XPeng can stand out with its full-stack software capability for in-vehicle and autonomous driving systems, and well poised to seize high-frequency transaction opportunities versus the auto industry's low-frequency vehicle transactions. We estimate that XPeng's better user engagement via a direct channel and enriched service content of self-driving, as well as in-vehicle content, could generate more high-margin recurring software/service revenue, updates the firm. So Morgan Stanley assigned a price target of $70 to XPeng. So basically, that's a very significant price target increase. So XPeng is currently trading at 48.18, and the high of XPeng was 74.22. About that's not completely accurate. This is showing the daily highs, but it probably could have hit a intraday high higher than this, but it's still in the $70 range. And with Morgan Stanley giving such a high price target to XPeng, it's a really good sign. So we also saw Morgan Stanley give a very high price target to NIO as well, an $80 price target. If you haven't seen my other video on NIO, I actually bought calls at the $80 price point after I saw Morgan Stanley call this out. There's actually some few pretty interesting valuation perspectives out there on XPeng right now. If we go over and take a look at one of them, we can see XPeng, the Chinese electric vehicle maker, continues from strength to strength. XPeng stock will track NIO's rise as it's on a similar growth path as its larger electric vehicle peer. If we compare both companies, we see that XPeng is starting to catch up with NIO, as I pointed out with the delivery numbers that we looked at earlier. In fact, this implies that its market value in XPeng stock should be at least 64% higher than it is today at $95 per share. So comparing growth rates at XPeng and NIO, for example, on January 5th, XPeng reported blowout December 2020 growth, just like NIO did. XPeng had a 26% year-over-year in monthly increase year-over-year in monthly deliveries and a 35% increase in month-over-month growth. Moreover, its quarterly delivery growth was up 303% year-over-year and 51% quarter-over-quarter. That's actually insane. XPeng is set to have an absolutely crazy year, and I think this is a very good dip to buy. So in general, if you are thinking about adding XPeng to your portfolio, I think this is going to be a pretty smart dip to buy. I'm going to consider buying some calls maybe a year out on this company at the $70 to $80 price point, and if they're too expensive, I might go all the way up to $90 or $100. So let's take a look. We can see that these are going to be January 1st, 2022, and we can take a look and see that these are actually very expensive. So these 90s are going to be about $859 per contract. I think that's a bit too expensive right now. If XPeng continues to fall, I might buy these, but another good option if you want to play this company is you can actually sell some cash secured puts. So if you want to go out and collect the most amount of premium, you can actually sell these January 21st, 2022 30s and collect $570, and you would just have to put up the $3,000 of collateral to buy 100 shares of XPeng at $30. So that's not a bad deal. You could actually get XPeng at a much lower price and collect a lot of premium. The only problem with this strategy is that your $3,000 of collateral is going to be tied up until January 21st, unless you want to buy back this put option that you sold at a later date. So let's say that right now you sold this contract for $570. You collect that amount of money, and XPeng goes all the way back up to 65 or 70, and this put option is now worth $100 or $200. You can buy that position back, close out that cash secured put, and release your collateral back to yourself and make about a $300 profit. So that's not a bad deal. It's about a 10% gain in a short amount of time if this were to happen very soon. So that's going to be it for this video. If you guys enjoyed what I had for you in this one, please go down and hit the like button and hit the subscribe button. It really helps me get this information out to as many people as possible. You get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great weekend, and I'll see you guys in the next video.